Our next guest says you'd better not be investing in China with his money. Safanad, chief investment strategist and honorary professor at the Chinese Academy of Sciences, John Rutledge, joins us now. I was going to be sarcastic here and say, John, you see nothing but clear skies and butterflies in China, but it is quite the opposite here. I've not heard you quite as down. You say it's just not investable right now.
It's really not. Well, this is the slow economist on fast money, so I won't have trading tips for you. But Tyler, the problem is that the headlines are all about the economy. 5.2% growth sounds pretty good. Last year was 3%, but it's really just the rebound from COVID. So that's not the real issue, though. There are structural problems, debt, real estate problems, et cetera, everybody knows about. But the real problem is that it's a place that exists under one-man rule. If you want to know the big risk of investing in China, ask Jack Ma. I know Jack since he started Alibaba, and this guy can wake up one morning, have a brain cramp, and whatever you own there means nothing. We got to remember, when you own a stock or a direct investment, the duration of that investment is roughly 35 years. Do you think you can see 35 years into the future with Mr. Xi Jinping's China?
No, absolutely not. It speaks not only to the investability of Chinese stocks or ETFs that do business there, but doesn't it speak as well to the viability of American businesses or Western businesses that are doing business there, either as a market or as a manufacturing center? If you're saying that the equity business is subject to one-man rule, certainly foreign direct investment into plants and into markets there is in jeopardy.
Absolutely. Well, Tyler, the punchline here is that the new national security law means it's not safe for an expat to be in China. You can be arrested. You could be denied exit from the country at the will of the government. It's just not a safe place to be. Now, if I put on my board of directors hat, of which I am on a bunch of boards, and I think, well, let's say I've already got investments in China. It's a huge market that's very seductive, but it's not one to take the bite of. You have to maintain your existing investments or else they fall apart. But you don't have to do it aggressively, and you don't have to do new projects. So this last year, China lost $100 billion of FDI, and they're going to keep losing as long as this continues in this way. The decoupling is one problem, Xi Jinping is another.
Yeah, I'm hearing you say if you're advising an American company, you're saying if you're there, do not up your capital investment there, and in fact, do the minimum amount of maintenance that you need to do to maintain your position.
Which is the only safe way to reduce your capital position in China. Otherwise, you can sell it at a deep discount to a local. But it's probably if you do that too aggressively and if you do it too openly, the government will punish you for it. So you've got to keep saying the right things in China, but not extending yourself any more than you already are.
Well, I don't know what Apple's doing, but they seem to say the right things. Guy, jump in.
No, they do. Mr. Rutledge, put your geopolitical hat on real quick. In early December, President Xi was here. I think 3 weeks later, we learned that he told President Biden that by any means necessary, we will take Taiwan. I'm paraphrasing to a point. So my question to you is, does the weakness in the Chinese economy make it more or less likely that they were to do something there?
Well, I think, as I remember, TSM's earnings are out tomorrow, which is relevant to this conversation. Taiwan, who knows what's going to happen? The problem is in a normal government, in a normal country, there are a lot of people involved in making decisions. So the average of 100 people looks like a normal distribution. So the average of one person looks like one guy. And so he can wake up tomorrow morning and do something aggressive. Now, the recent trouble they've had in the military with corruption, using rocket fuel to make hot pots and so forth, is gonna make him not want to take that bet or take that chance. But they're very sophisticated information warriors, as are the Russians. So you're going to see a lot about that coming up during this election year, because they're going to think the more they can scare people here in America, the more they can push the results of the election.
All right, John Rutledge, always good to see you, sir. Thank you very much. Appreciate it.
Thanks, Tyler.
Let's trade it. Are you with John there in saying that China is not investable?
We've said that for a while here, and one of our biggest concerns was the FXI. If we can put up a long-term 15-year chart, and you'll see where it levels today that we're last at October in 2022, and then go back to the financial crisis if you want to go that far, and you'll see. I mean, this is alarming stuff in terms of this ETF, and then in terms of the underlying stocks as well. So there will be a point where you can get that capitulation in the individual names like in Alibaba, but we haven't gotten it yet, Tyler.
Thoughts?
You know, there was a time when we used to worry about investing from America in Alibaba because America would do something to China on trade or what have you. Xi Jinping does enough to his own companies to damage it, to make sure that you can't have any future earnings in those stocks. So I think it is uninvestable right now. I think there's a lot of stuff going on behind the scenes that we have no clue with. So I wouldn't be touching China right now.
Yeah, it's very interesting. And obviously there's a new regime in Taiwan. It would seem natural if you've got a worrisome economy at home. That is typically when politicians like to do something to distract, okay? Yes. And you've got this new leader coming in. He's sort of like the old leader. He's from the same party in Taiwan. You would think that would be a time that China might test Taiwan either before he takes office in May or afterwards. Anyhow, coming up, Ford shifting into neutral after a downgrade from UBS. We will pop open the hood and take a look at why one analyst is putting this automaker up on the blocks. Plus, Schwab in shambles. The brokerage reporting a decline in revenue and profits before the bell. That name is our next guest's top holdings. Where he stands on that stock now and his top value picks. That will be next.